Have you ever looked at a small trading account and just wondered, how on earth do you turn that into a really significant amount of money? Well, I'm here to tell you it's not magic, and it's definitely not about luck. It's all about having the right plan, the right skills, and maybe most importantly, the right mindset. So let's dive right in. We're going to break down the real formula for growing a small account step by step.
But first, we've got to talk about the big, scary number in the room. This one right here. The harsh reality is, about 90% of new traders wipe out their entire accounts. So why does this happen? Is it just bad luck? Not at all. It's a pattern of totally predictable mistakes, all driven by the wrong approach. And you know what? Understanding these mistakes is the very first step to making sure you avoid them.
And you know, the interesting thing about this list is that every single one of these points is connected. That whole get-rich-quick idea, it leads directly to trading without a plan. And when you don't have a plan, you start taking crazy risks. And when those risks go bad, what happens? Emotion, fear of missing out, it all takes over. And suddenly, you're not trading anymore, you're just gambling. If any of this sounds a little too familiar, don't sweat it. You're in exactly the right place to change that. So, here's our game plan for this explainer. First, we'll dig into the unique dangers that come with small accounts. Then, we're going to completely reframe our mindset. After that, we'll get into the real, practical formulas for managing risk and making a profit. And to wrap it all up, we'll lay out a realistic roadmap to get you where you want to go. Let's do this?
Okay, first up, we're zeroing in on a really critical area, the hidden dangers of trading with a small account. See, it's not just about having less money to play with. It's about the intense psychological pressure that creates.
When your capital is small, the pressure to hit a home run on every trade is just immense. And that pressure leads you to risk way too much on a single idea. You might also get caught in the trap of over-trading, thinking that if you just trade more, you'll make more profit. But usually that just bleeds your account dry. And of course, let's not forget the social media hype promising overnight riches or the dangerous use of leverage. That's trading with borrowed money, which can magnify your losses and wipe out a small account in a single bad trade.
So to get out of those traps, we have to make what is truly the most important mindset shift you can possibly make. You've got to stop treating trading like a trip to the casino and start treating it like you are building a serious business.
I mean, just look at this comparison. It's like night and day, right? A gambler runs on emotion, always chasing that one big win, basically just hoping for good luck. A business owner, on the other hand, is driven by a plan, aiming for slow, steady growth that's built on skill. So the real question is, which side of this chart are you on right now? And more importantly, which side do you want to be on?
This right here is the absolute core of that business mindset. See, every single business has expenses. In trading, a small, well-managed loss isn't a failure. It's the cost of tuition. It is a payment for a lesson from the market that you just can't get from a book. Think about it. Your trading journal, the one filled with both your wins and your losses, that becomes your most valuable asset. It's your personal guide to getting better.
Okay, now let's see how this business mindset actually works in the real world. If trading is your business, then risk management is your accounting department, and its one and only job is to protect your capital so that you can stay in business long enough to actually become profitable.
This is the golden rule. It is that simple. By risking only 1 to 2% of your total account on any single trade, you make it mathematically impossible to get wiped out by 1 or 2 or even 10 bad trades in a row. This single rule keeps you in the game, and it massively reduces that emotional pressure we were talking about.
And how do you enforce that 1 to 2% rule? With this tool right here, a stop loss. It is a non-negotiable. A stop loss is just an automated order that kicks you out of a losing trade at the exact price you decided was your limit. The analogy on the screen is perfect. Trading without one really is like driving a car with no brakes. Sure, you might be fine for a little while, but eventually disaster is inevitable.
Now, protecting your money is only half the battle, right? On the other side of things, your winning trades have to be bigger than your losing trades. And that is where the 1 to 2 risk-to-reward ratio comes in. It just means you only take trades where your potential profit is at least double your potential loss. Now, think about that for a second. With this rule, you can actually be wrong more often than you're right and still be a profitable trader. So, once we've got our capital protected, how do we actually grow it? Well, this brings us to the real strategy for profit. And, spoiler alert, it has absolutely nothing to do with hitting some massive, life-changing home run trade. The real secret is the power of compounding. Just look at this table. A tiny $100 account growing by a consistent 10% a month, which, yes, is ambitious but totally achievable, more than triples in 1 year. The early gains, they look really small, almost pointless. But as those profits get reinvested, the growth starts to become exponential. This is how real wealth is built in trading, through slow, boring consistency, not lottery tickets.
So, where do you find these consistent gains? By mastering a specific strategy. It doesn't matter if it's trading breakouts or using support and resistance levels, or just following the trend. The key is to find a proven method and then stick with it. You do not need to know everything. You just need to become an absolute expert at one thing.
All right, let's pull all these pieces together into our final section, a realistic step-by-step roadmap that you can actually follow to go from a struggling new trader to a consistently profitable one.
This is the path, and the order is everything. You don't get to jump to step 5. You have to start at step 1, education. Then, you practice in a demo account until you're confident. When you finally go live, you start small, and your focus is purely on discipline and executing your plan perfectly. The goal isn't making money yet, it's just being consistent. And only after you've proven you can be consistently profitable, even with tiny amounts, only then do you slowly start to scale up.
And as you walk that path, just keep this slide in your mind. Think of these as the landmines that will blow you completely off course. Never, ever, ever trade without a stop loss. Keep your leverage under control. Do your own analysis instead of just blindly following some signals you saw online. And please be deeply skeptical of anyone on social media promising you guaranteed easy profits.
So, what's the one big takeaway from all of this? I think it's this quote right here. Growing a small trading account is not about taking one giant leap. It's about taking one small, disciplined, well-planned step day after day. It's a business that you build, not a lottery that you win. The only question left is, are you ready to start building?